Hi, Amber.
Hi, Jason.
It's lovely to see you again. We connected at GAC briefly. We missed each other in karaoke, but there were a lot of rooms and a lot of movement. So we'll have to do that again next year, or
There,
maybe at one of the 400 conferences over the next 12 months.
yes, yeah, the 400 people at karaoke made it a little tough to find
It was hard getting in
each
and out
other.
of
It
some of the
was
rooms.
so crazy. It was
Yeah,
so crazy.
it was good. Hopefully, that's an event that you do again next year. So that was fun.
I think that's the plan.
Awesome. So, who are you? And tell us a little bit about what you do.
Yes, my name's Amber Harson. Currently, I work for Mambu, which is a next generation core data processor. But as sort of a bigger picture of that, I'm a lifelong credit union movement member. I started off at 18, like so many other people within the credit union space, as a teller. Yep. I was a drive-through teller for a number of years for a credit union here in Utah. Took a break after about 6 years after I graduated college and went into the career I thought that I wanted while I was using the credit union as my college job,
What
and
was
made
that?
it. I went into the medical field, so I was actually doing medical research.
Cool.
I managed an international drug trial, which was super cool work, except for one day about 2 years in, one of my colleagues was like, have you ever thought about going back to a credit union? And I said, well, not really. Why? And she's like, well, because I'm kind of tired of you talking about how much you liked working at a credit union. And she's like, so I think maybe you should think about it.
Wow.
And a couple of things, a couple of patients passed away that I was close with. And I was like, maybe this isn't for me. I don't actually think I love this. So those two things were a catalyst for me to go back.
Mhm.
And so I ended up going back to the credit union I was a member of and seeing if they had any job openings, and they did. And so I applied for a branch manager role. And over my 6 years with them, they were a smaller credit union, about 90 million in assets. Through my time with them, ended up being the project manager for their mergers and acquisitions. We had done a couple strategic partner mergers with two other credit unions of like size. With each one of those came core conversions, credit card rail conversions, digital banking conversions, and the like. So I spent about 2 years running the technology conversion projects and the merger projects from the technical side. And then about 6 months of running the digital channel and digital strategy before our core actually approached me about joining them. So we had a QSO core that our credit union was an owner of.
Wow.
Jumped over to the core side and saw an opportunity to help more than just one credit union provide services to their members,
Mhm.
which is something I feel really strongly about for personal reasons. I credit credit unions for both changing the trajectory of our family's life and breaking some financial poverty cycles that have existed
Absolutely.
generationally for us. So I have a really deep personal connection to the credit union mission,
I love
and
cooperative.
gave me a great career, right?
Yep.
That's allowed me to provide for my family. So on both
Mhm.
sides of the fence, they've been really instrumental. So I saw this opportunity to maybe help contribute in a greater way across multiple
Mhm.
credit unions. So I went ahead and jumped over to the QSO side and spent a couple years being part of the implementations team, then managing the implementations team. Then I moved into product and product design and sales and became chief product officer. Then I was promoted to executive vice president of market engagement and sales, and then actually became CEO 6 years later. Spent 4 years with them. I got the QSO to a point where it was an attractive acquisition target, and we made the decision to sell to a digital banking provider.
Mhm.
And at that point, was a nice little time to break away from a decades long engagement and try something new.
Mhm.
And ended up joining Mambu, which is international core. So now I get to engage with credit unions all over the world, which is really, really fun. And getting some of the learnings from them to bring back, and still looking at how technology can enable our credit unions to do for other people the similar things they did for me and my family.
Mhm. I see you spent some time at Circle. How was that?
I did spend a year with them. I love Circle. I miss them tremendously, and they are doing really cool work. I love that the credit unions came together and looked at how to engage in the fintech space in a different way and how to benefit from it, not just as customers, but also as sort of investors, and maybe find ways to benefit from when those fintechs inevitably sell or go public. They got really creative when they created the Circle Fund. So that was great to be sort of on the edge of some of the emerging fintech as well.
So tell me about Mambu.
So Mambu is an international organization that was founded in 2011, and was founded in Europe from a couple college students who actually saw that we're working with financial institutions who were struggling with legacy tech and being able to adopt like real-time data analytics. They were trying to do like event-driven process optimization, and they couldn't do that because these systems were batch-based and closed, or the integrations were really expensive. This should all sound really familiar to the US. But so similar problems, right? They're a really established banking system in the UK. And they said, well, we think we can solve this with current technology solutions that exist, you know? So they stood up a new core banking engine and took off from there. And 15 years later, they're serving 260 financial institutions from de novo all the way up to tier one big conglomerates internationally, with more of that lightweight, headless core, composable core, API first model. And they've made the decision to come to the US and see if we couldn't help credit unions specifically with some of the pain points. Good. I mean, as we all know, core is a 4-letter word. Nobody wants to talk about core if they don't have to. But I think we've been really, what I've observed in my last 5-6 years in the core space is credit unions, we all understand that our cores are hindrances in a lot of ways, whether that be the actual technology, whether that be the business relationship and the way that the owners of said cores engage with us. But we're consistently talking about that, and it hasn't changed, right? Cornerstone just released a study looking forward into 2026, where financial institutions overwhelmingly said their biggest blockers to growth were legacy systems, lack of good integrations, and automation. Like heavily. All three of those things are reliant on core systems.
Absolutely.
So what I've been hearing though is beyond the pain, right? The pain, the risk, the fear of how big those projects can be, was also a couple dreams. And that's things like, why do we have to do big bang, rip and replace core conversions? Like those are so disruptive to our business. Innovation or creativeness almost has to stop because we spend all of our time getting ready. Why can't we incrementally move? That's one thing. And then the other is like, we want to decouple the core. We're hollowing out. We're actively hollowing out things from our core and buying fintech solutions to solve for, because they're better. Absolutely. And then we're integrating them the best we can, right? They're doing the best we can. We're trying to modernize on the edges, but ultimately you still end up with some level of constraint because at the end of the day, you're still reliant on this core system. So those kind of were the two themes. Like, we want to decouple. We don't want the core to own all the business logic anymore. Why can't it just be the transaction processing engine? Like, why can't it just do that?
Exactly. It's a giant database.
Right?
It really is. At the end of the day,
that's what Mambu is, right? So
there's a debit, there's a credit. I mean, it's really as basic as that. Why do you need all this extra nonsense?
Why do you have to do all this stuff and we're paying for it? Everything that comes with that. And so that's been like a theme. And what I learned when I discovered Mambu is that there's a name for that solution. We just didn't know, and we don't know, and that's composability and being able to create ecosystems. So for Mambu, I think what was interesting about that for me, coming from a credit union and then another core, was that it was built exactly for those two reasons and to solve for those two reasons. And the enablement and empowerment that gives back to financial institutions to just have the core control the transaction logic and let me pick my purpose-built ecosystem and as a credit union have ownership over my processes and what happens with my product and orchestrate those myself gives me so much autonomy for differentiation or using all these fintechs that I'm paying for to the best of their build, which we can't always do. We buy fintech solutions all the time and then find out we can't use all of it.
This works, but only in this core, and this works, but only in this core. And if you have this
Yes.
core, you can do this, but you can only read and you can't write.
Yep.
We do that. We run into that all the time.
Yep. And how interoperable across everything else.
Yep.
All of those things are one-to-one integrations, which increases our costs. Like it all just builds up and kind of creates technical debt, operational debt, expenditure bloat, all of those things. And so for me, what was exciting about Mambu was like, this is a model that actually breaks those chains.
Mm-hmm.
And as credit unions,
are there some that you would say are better or worse than others?
Yeah, I think there's certainly some that have tried, right? I think there's good intentions, and many of them have announced modernization efforts, and what they're doing is the same thing, right? They're breaking up the old core systems into microservices. They're trying to build them API first. The delivery of that hasn't really come to fruition yet, and that's frustrating.
Well, what would you say to, there's one very large core provider who recently, communicated that they're going to take an initiative to do a core modernization, and the industry blew a gasket. Oh my God, you're going to make me switch my core. Oh my God. Everybody losing their mind. And then provider has to release a, press release and say, hang on, we didn't really mean it. I'm sure they did, but they mean it, but they don't really mean it. If you really want to stay, you can stay, but also that comes with no more development, no more, roadmap. It's going to be sunset. You're basically going to get compliance releases and that's it. So, okay.
Choke you out over time.
There's no modernization. It's sort of it's a slow death march rather than off with your head. So so while I would 100% agree that, and certainly this large core provider with their 486 different cores underneath one very large umbrella probably could use a little bit of consolidation and figure out a way to do that. But, how do we respond to credit unions who raise holy hell because it is disruptive? There's an opportunity cost in all of this time you're going to sink into the core conversion project, which is not a push button. Maybe you can get deconversion files in a push button, but you're not going to convert. There's training. There's tons of risk. So on one hand, I kind of get it that from an operational perspective, it's way easier to support a stack that has, let's say, 5 cores instead of 14. But if the industry is not ready to do that, this feels a whole lot like tokenization and instant payments and all that kind of stuff. We love checks and we love paper cash, and we are the last people on the planet to have tap to pay. Like we're the last people on the planet to use NFC. So is this an America problem? It's in some ways I think it's a credit union problem, but this feels like an America problem and not necessarily an industry problem.
Yeah, I'm not sure you're wrong on that, because I think one of the things that's been the most enlightening in joining a global organization is actually seeing what credit unions and community banks, right? I'm going to actually put them both in the same bucket, because we certainly think and behave very similarly to one another in other countries, and the difference in approach in those other countries. I would say we are certainly slower to adopt, and I think we've seen that in the options we have available to us in the market. Right. So Mambu is by no means the only next gen core. We're not the only cloud native API first core. There are 4 others in Europe and Asia and South America, 4 or 5 other significant systems. You've got companies like Thought Machine, you've got companies like 10x, Toom in Asia, Pismo in Latin America that Visa just partnered with. there's certainly a slew of them that exist, and that's because there's demand, right?
Yep.
Though they stood up because there was demand.
But
You
you're
haven't
not going to see them
seen
on the
them
Callahan core
in the
provider list
US.
ever. I mean, it's going to take
Precisely.
decades.
Precisely. So you don't see those organizations pushing hard for the United States market. And I think that is because we've built a bit of a reputation for ourselves of
Yep.
being, particularly in credit union space, being very risk averse. Fair, right? We take very seriously our fiduciary responsibility to the member capital.
Yep.
Um, and being slow to adopt, and maybe even some superiority complexes we might have. I don't really know. That's getting into some other psychology. But we've certainly seen that kind of hesitation by organizations to even come in and create choice within the United States. I feel like what I've seen and heard is more openness to at least discuss the different options that exist. I think it keeps coming out in the data over and over again in surveys that we know what our problems are. I did find it interesting. We saw a 6% decrease for 2026 in people planning to spend money on one of those top three problems, which was a little bit of a head scratcher for me. But I am hearing so many CEOs and CTOs saying, like, well, I at least want to learn. I at least want to understand. Like, I might not be ready, but I am ready to at least explore. We're seeing smaller subsets say we want to go API first. Like, we know we have a strategy where API first is going to be important to us. They're not necessarily entirely ready to talk the core conversation yet. And there's risk to that, in my opinion. The risk is to our relevance. And that's where I feel like we're at that.
Your lunch. And
Yeah,
they're completely composable, and they're completely dynamic, and they can do things like that. You're not going to compete. If you're running ultra data, good luck. I mean,
yeah. And I feel like we've been driving towards that inflection point for a long time. These are similar conversations that have existed since I started at credit unions in 1998.
Yeah.
So these aren't new, but I do feel like that's accelerating considerably, and a lot of credit unions are also starting to think outside the box. Like, they are starting to look outside into other realms in other countries. But I think your point is valid. I do see other countries adopting at a much faster rate, including well-established financial systems like the UK. It's easy in emerging markets. They don't have all the infrastructure that we had.
Absolutely.
So they've leapfrogged us, and they've been leapfrogging us for a long
They're happy
time.
to
But
get, like, swift access. I mean, it's just, please give me something from 60 years ago.
Yeah. And they're digital first already, because their infrastructure is really just starting. Like, if you look at Latin America, they're really just starting to step into their own. So they're not even bothering with the legacy stuff. They're going straight to everything being cloud native, digital first.
Yeah.
So they're moving much faster than we are.
What's funny is when I started at the credit union I'm at now, it was 2017. At the time, the credit union had an engagement with Gartner, and Gartner had their financial services advisory services, which was fine. The problem, though, was they didn't have domestic financial services background. They were bringing solutions like Temenos and some Latin America, some Eastern European cores that nobody had heard of as potential options. And my credit union was certainly not going to be an early adopter of Temenos as the core. So ultimately we jettisoned Gartner because it just didn't make sense. Then you go to your your Callahans and things like that, and you start looking at their list, and you're like, oh, okay, this is like a who's who of the Walking Dead of core providers.
Yeah.
So as some of them are more relevant than others, and the challenge is how do you break into that market? I mean, consider that a question. How do you break into that market with a better product that's built for today and tomorrow, that's completely flexible? How do you break into that?
It's not easy, for sure. I think there's no that road is certainly a challenge for Mambu as an organization. And when we when Mambu made that decision, they certainly came into it knowing this is not an easy path, and kind of coming into it like acknowledging that a lot of what we'll need to do for a long time is education, and working with financial institutions to help them uncover that education and what the benefits are.
Right.
We are seeing a little bit, what I have found is a lot of credit unions are starting to hire tech executives from outside of the credit union space and into the fintech space. Yep. And they don't even want to look at the old systems.
Yeah.
They are actually asking those consulting firms, the Cornerstones, the SRMs of the world. They're like, you can bring one or two maybe, but you better bring me two alternative solutions as well.
Talking API, they better be talking open, all of the stuff, 100%.
Yes, yeah. I certainly think that's where that starts. You're getting fintech builders who are accustomed to that kind of speed and that kind of agility, and having a different level of autonomy and control coming into the credit union space and starting to make those tech decisions. Outside of that, it's really about educating. Like a lot of my job is really about the teaching of why, how can you do different? How can phased implementations actually work? Is it even possible, right? Lots of people say that sounds too good to be true. And thankfully we can show them a lot of use cases from around the world where people have done that. But it's new for us. It's totally new.
Yeah.
When's the last time a big three told you that you could phase your migration over 3 years at your pace? Never.
No, definitely not. The only way that happens if you're going from one of the 15 cores to another of the 15 cores. It's probably the only way you'd be able to get that to happen.
Even then, it probably wouldn't be cost effective because you've got to pay for the entire monolithic system for the new one and the old one.
Yep.
So now you have the care feeding.
It makes me laugh when I see that there are these credit unions out there that are running multiple cores. They've decided that their commercial banking product needs more than what the consumer banking product is. So rather than look at a more robust, composable, extensible, microservices built API open architecture core, let's just strap on this other side core and we'll just use that for commercial. That's crazy to me. They don't talk to each other. Now you've got to essentially train two groups of people on two different. It's maddening. I wonder if
that can work if you have connectivity. Though you said something really important there. That dual core architecture, multi-core architecture is super popular amongst tier 1 institutions. Like they use them all the time. The difference is that they invest a lot of time in their interoperability across to those verticals, or they're making very, very specific business decisions to almost run them like their own companies.
Absolutely.
Right. And then it doesn't really matter because you're treating it that way.
Well, if you've got two modern cores, then, that problem
makes it much easier. Yep.
100%.
Yep. But there's some benefits to running for a period of time. I don't know that all forever is a great solution.
Yep.
But you certainly can leverage those multi-core strategies as part of your phased migrations, and certainly de-risk your migration paths using that.
Well, I'm curious if a potential way to get these new modern cores, on the great shores of the United States, I wonder if a potential way in would be with some of these larger third-party servicers like Member Solutions or MSS and United Solutions or CU Answers. They have their own course, so that'd be a weird one. But if it's time for them to sort of refresh what they're doing, I think MSS is very strong with Jack Henry. But if they've got a core modernization project, which I hear they do, if that's the case, maybe that's the time to consider some of those alternative products, and then you get 4, 5, 6, 10, 15 credit unions that can testify and say, hey, look, we really like this flexibility, and maybe that's an avenue that that these new providers can pursue.
I have a crazy idea on that front. Even these proprietary cores, especially the ones owned by credit unions, Realistically, because when you're talking about the next gen systems, these headless systems that have really decoupled and hollowed out to the bare bones of what a core should be, which is your transaction processing ledger system and your CIF record, instead of rewriting all that really boring, not ROI generating stuff, you could just replace it underlying with one of the newer cores and then build all the beautiful experiences you're really good at. And your OAOs and your digital banking and your collections platforms and your CRM work and your tellering platforms could certainly then, which are the things that are attractive for credit unions. When we're looking at cores, no one says, show me the transaction processing engine and let me watch it chug through
Yes.
my debit card channel,
Yep.
right? That's not what we're looking at. We're
Can
like,
I see the
show
stored
me.
procedure, please? No, that's never happened
We're
during a
not
demo,
looking
ever.
at any of that, right?
Yep.
So, I mean, obviously, you have to trust it. You need to know that it does what it's
Mhm.
supposed to do. But
Yep.
I think there's, because a lot of the proprietary cores are also doing the same thing. They're like, we know we have to put money into modernization. Like they're saying that to their customer bases. It's just how you go about doing it. And I think for QSOs particularly, it's a good conversation for build versus
Mhm.
buy some, build some.
Yep.
Buy all maybe because you lose your proprietary ownership, and that's important in a QSO structure. But for me, crazily, I'm like, that is an option.
Yeah. So why do you think we don't have a core with MDC or Circle right now? Why is there not a next gen core?
Well, so
in their
Circle does have a core
They
in their
do.
portfolio. They do.
Oh,
Nimbus is in their
that's
portfolio.
right. I don't know.
People
Yes,
forget they're
core.
kind of core because
I
they're in
know,
the
but
credit
it's
union
digital
space. They've
side core. It's one of those add-ons. I don't put them in the same category.
They technically have a full
Yeah,
blown core. It's
they
just not.
do.
I don't think
I give them
anyone in the
that.
credit union space is using it at the
I think
moment.
one. I
Maybe.
think there's one, and that's it.
Yeah, if
But
they're there
the others are
yet, or
digital.
they announce that they're going to. I know it's
Yeah.
close, but I think the
Yep.
majority of the rest of their servicing has been more on the
That's
banking
right.
side of the house.
You're right. I forgot about Nimbus.
So yeah, well, we got to give credit to Circle where they
Mhm.
found it,
They did. Yep.
because they did make a concerted effort, I think, to invest in that type of architecture, recognizing the value from that architecture for sure. From my perspective, I think for the others, it is the decision between buy or build your own, and they've had that proprietary ownership of all that code for a really long time, and it is a risk. You have to spend a lot of time considering whether you want to change that.
Yep.
And if you want to keep all of it as proprietary, then where's the money come from?
So
Right?
how would you suggest a credit union that is struggling with, they're having some challenges with their existing core. Maybe they've run into some issues with integrating. Maybe they're on Ted's core from 1860. They've decided we really like Alchemy and we really like Lumen, but there's no integration for our core because it's based on a spreadsheet.
Yep.
How do they approach, the modernization versus the rip and replace? How do they, how would you recommend that they approach that?
I would certainly recommend that they start to consider what progressive transformation means for them. And understanding that it doesn't have to be a single event type of project. You can, and again, this goes back to where I say some of that dual core architecture has some value, has real value in de-risking your projects, from financially de-risking them, data quality de-risking them, giving you time to get your feet under you, because it's certainly a different strategy, right? When you're talking about moving to composable systems and creating ecosystems, your shift of responsibility moves from the core to you.
Yep.
That is different for most of us because we're taking the commodity and putting that into the core, but we want ownership back of our business logic, our process journeys, what services we're using and when we're using them.
That whole orchestration layer.
That orchestration layer, you're taking that back from the core who owns a lot of it today. So it is certainly a fundamental shift in thinking. So I do think as financial institutions, when you're considering what that future state looks like, you do have to start to think about not what can my products do today, but what do I actually want them to do? And have your process maps, and then start to look at where can you modernize, maybe by subsegment. And if that's lending, let's say it's in your lending portfolio, it's new small business lending or something like that. Can you then start to leverage some of the learnings from the bigger financial institutions who run multiple cores to say, I'm going to modernize this product line first, and I'm going to use composable systems. And those are typically also volume and consumption priced. So you don't pay for everything, you pay for what you use. So that's also different than what we're accustomed to.
Absolutely.
So it can make it more affordable. And now I can go in and learn. My teams can learn. I can only have a subset of members that are impacted at one time. So the stress levels are certainly decreased considerably. I get my feet under me with one product line. And now I say, what does the second product line need to look like? And I migrate them. That comes with work. I know that sounds so easy. It certainly comes with work, because you also need to have a layer of API management to connect your ecosystems together, because you're running two systems now. So but it does give us a way to do that at our own pace, and in a way that we can have better control over costs, because we're not buying full-blown systems.
How small is too small to really have these conversations? Is a $50 million credit union appropriate to be, considering a composable core with all of that, managing the orchestration layer, when the CEO is also changing light bulbs and, and emptying the trash in the bathroom? Where do you draw the line?
Yeah, I think that's a super fair question. Composability is the thing that actually, in my opinion, changes small credit unions' trajectories. However, I do think a $50 million credit union by themselves does not have the internal resources. And this is where QSOs could play such an important role, and those shared services models that we've seen be successful, right? This is part of why CU Answers is so successful. This is part of how Valera became so successful back in the day, right? We know there's power in that model.
We can't do 100%.
Yep, we 1000% as a movement know that that's a superpower that we have that many other industries don't. So for me, that's where that type of engagement really comes into play, as we get the economies of scale. You have a shared model. You can use multi-tenancy to keep the costs down. You have a shared set of API. You're going to need API development, right? That's part of what moving to digital first means. Digital first means you have to have some level of API development experience. If you're saying that, that's part of what comes with that package.
100%. You
share that team across that shared tech stack, and they can build you whatever you want in a couple weeks.
Yeah.
So for me, it's there's not a small that's too small, but it is in how you execute on those types of projects is going to have to look different for them.
So is there a Mambu QSO in the works? Is it, right around the corner? Is it an opportunity to, help out some of these $50 million credit unions, survive in the SoFi world we live in today?
Yeah, we are certainly exploring those options, and see that as a very viable path for financial institutions and for credit unions alike. But I certainly think the move towards the modernization and the modernized cores and composable cores creates a path for small credit unions that's not just a merger.
Yeah. I mean, if you're competing against SoFi, you're not going to do it with some of these legacy cores. I'm not going to call anybody out, but there's no way to do that.
I wrote a whole LinkedIn post about losing my 18-year-old to SoFi from my $4 billion my $4 billion credit union, right? This is not a small credit union. This is a pretty big credit union.
Absolutely.
And we still lost the battle to SoFi.
For him. I think as a movement, we're not doing a good job telling our story. I actually have I'm recording another
Agreed.
episode tomorrow. I think it's tomorrow, and it's about telling your story. And we're going to focus specifically on credit unions telling the story. One of the other things that I had to do today was I'm on the For a Bright Future Foundation, and one of the things we're doing is we've sort of partnered with a high school in New York City, and we're focusing on financial literacy and getting them young. Basically, is at the end of the day, that's the most important thing. The average age of a U.S. citizen is like 33, 34. The average age of a credit union member is in the 50s. The average age of a board member is like 73. That's insane. Our leadership, volunteer leadership, not executive leadership, is 70 plus years old.
Yep.
I have a member of my board. I have a great board. I have a member of my board that has been on our board longer than I've been a human being.
Yeah.
And I'm 50. Craziness. So we need to do something about that, so
we
hopefully
do. And
you and me can handle that.
There's so many channels for that. I hope as you go through that, I talk about this with my friends all the time. I am an avid doom scroller of TikTok, admittedly. And
get away.
What was that?
Get away.
I know. There's lots of opinions around this. But what's so interesting is the algorithm certainly brings me what I want to see.
Yep.
But the number of financial influencers in social media and YouTube and TikTok.
Yep.
And those that are like community organizers, especially politically, frankly, that advocate for credit union usage is crazy.
Yep.
Like they get it and they're trying so hard to tell that story for us.
Yep.
And even in their comments, you'll be like, I love my credit union. I wish their digital app was a little bit better. But like, I love the people and I love the services and I got a great rate. So like, it's all there. It is certainly percolating. The connection behind it and the collective storytelling is probably still missing, but it certainly is bubbling under the surface.
It's the only problem with that is I love that stuff, but then there's the other stuff, like here's how you get free money out of an ATM, or here's how you go into a credit union and literally commit a felony,
literally defraud them. Yeah, that certainly all exists too.
How do you filter that? And more importantly, how does the 13-year-old filter that out? They don't know any different. All they know is this guy who gave me a really great hack on what to do with mac and cheese is also telling me I can get free money out of an ATM. Let's go. 100%.
All fair criticisms of those platforms for
we need
sure.
A filter for those things. I don't know how to do it, so I'm not going to be on it. I'm just, the closest I get is I'll get on Instagram, and my wife hates it because and I've seen memes of this, and I just sent her one last night, of me, like usually in the bathroom, of course. I'm scrolling and I see something funny and I'm laughing, and she's on the couch with my daughter, and they're hearing me cackle in the bathroom, and they're like, I'm about to get the stupidest thing I've ever seen in my entire life.
Weird reel.
100%. I do it every day.
Yeah.
So she hates me for that.
Your daughter is definitely categorizing you probably mildly into like a boomer category type of thing when she says that too.
I'm there.
You're solidly Gen X. Like, it's all right. We're Gen Xers.
Yeah. What's funny is that when I was at GAC, I ran into somebody that I used to work with when I was at my first credit union in New Jersey many, many, many years ago.
Yeah.
And, we had connected over, I think, a Substack post, and he's a great guy. He actually subscribed to my Substack, and he actually paid money, which was just bonkers.
So cool.
To me. Somebody paid money to read something I wrote. I had to refund them. I didn't even know how he did it.
You were telling me you refunded somebody at GAC.
I had to do it. Like $90 to listen to my nonsense. That's just not worth it. So there's obviously feeds into the imposter syndrome and that whole thing.
Yeah.
But he introduced me to some of the other executives from his credit union. He said, "Oh, this is Jason. I used to work with him at Picatinny. He's a credit union influencer." And I went, "Oh, that just feels
I don't know if I like the way that feels."
No. Yeah. So I said, "Can we just agree that I'm a credit union advocate? Let's do that." I feel like that's the mature boomer way to say an influencer, so I'm okay with that. I
Well,
can't.
influencer feels sometimes a little manipulative too,
Mhm.
right? Like there's a bit of a negative connotation you
Yeah,
certainly can tie to the word influencer,
100%.
where advocacy like clearly is like
Mhm.
something I feel passionate
Yep.
about. It's a thing I
Mhm.
believe in. Influencing that could
Yeah,
be like paid, right? Like we all
yes.
know that. Like you could not care
Mhm.
less about what's coming out of your mouth. There's just a
Absolutely.
check behind it for
Yep.
you.
On my next
So I get it.
podcast episode, here's what you do with mac and cheese.
Yeah,
You know,
yes,
I'm
yeah.
not that guy.
And here's how you
Mhm.
get $500 out of an ATM.
Yes.
Like while we're
Free
at it.
money. Yeah.
Yeah,
Pass.
yes. 1000%. Hey, I want to flip one of the questions back to you because
Fire away.
you are a credit union tech leader,
I
right?
am.
So like you're in the thick of all of this. Where do you stand? Like what do you think credit unions, what would you advise them if they were asking you
Interesting. All right.
on
So,
this front, right? Like
yep.
this modernize on the edge versus deal with the root problem. Do we have 10 more years? Like super curious is the guy who actually has to be responsible for this in his own shop. Yeah.
So my answer would be, I think the answer is going to be different depending on the credit union, depending on what your mission is, who you're serving, the size, which we already
For
covered.
sure. Yep.
What your appetite is for API development, for the fact that you are now owning some of that
Level of
organization there.
responsibility.
So
Yes.
I currently am at a $1.5 billion credit union who I've had to pull kicking and screaming into the API integration world.
Space.
Even just basic stuff like click button, originate loan in Meridian Link is I'm looked at as Harry Potter and my part-time developers for Hermione Granger. So I think the best answer to that question is it depends, and it depends a lot on the sort of the profile of the credit union. Like what's your strategic take on growth? If your strategy is to put a human in front of every decision, whether that's
Everything.
deciding to open an
A
account,
digital
deciding
first
to
isn't
underwrite
for
a
you.
loan, it's using APIs and digital first isn't the
It's not
right
for you.
100%.
Yeah.
So you're good
Yeah.
with a legacy core. Let's
Yeah.
bolt on something that approximates the look of a SoFi. So you're going to get Alchemy, you're going to get Lumen. So you're going to get a modern digital banking product.
Yeah.
And even making decisions about the product and how you roll it out. So do you look holistically at your payment strategy? So while I can take what Alchemy is going to give me out of the box for transfers and payments, things like that, are you considering partnering with, say, an Alacrity and using OrbiPay and saying, all right, I want ACH and RTP and FedNow and wires, and I want all of that inside OrbiPay. So now what I've done is I've hyper optimized the experience for my colleagues, my employees, and my members. So you reduce the friction for the members, you reduce the friction for the employees. They can spend more time doing the things that they're good at, being
1000%
aware and hugging the member and doing all of those things that those very high EQ people do very, very well.
Really well.
100%. You're not going to get that from SoFi. You're going to get text. I want this. I want that. Great. And your thumbs are bleeding, and somebody on the other end, probably not even in this
Probably
country,
an AI chatbot.
100%.
Yeah, it's probably 90% of it's probably AI.
Yeah, which for some people is great. And 50% of the time, that's what I want. I don't need to talk to a human. I want to be able to do whatever it is I'm doing, like right before I fall asleep in bed with my phone up here. And every once in a while, I'm going to fall asleep and the phone's going to fall and hit me in the face.
Yeah.
Buddy in my life. And if I can get my banking done during that, I'm good with that. But every once in a while, I need to come in and talk to somebody about my IRA, or I want to talk to a CPA. I don't, I can throw it in Claude, but I don't trust that. I need to have that human interaction. And that's where I think, as a technology professional in the credit union space, I always look for those opportunities to take technology and give it not necessarily to the members. I don't think that's the best place for a lot of it. Some of it, like some of the automation, I like to choose some digital channels occasionally, but I think for credit unions, I think for us, giving that technology to the employees is more beneficial.
Yeah, it's huge.
It lets us be the humans to the members who, really at the end of the day need that human interaction in a lot of things. It's not perfect for everybody. And, go back to what I said right at the beginning, it depends on your credit union, depends on your strategy, depends on who you are. If you're a low income designated credit union in an inner city and you're serving a lot of cash folks that really, one, can't get a bank account, or two, don't care about the digital experience. They just don't want to go to the check cashing place, and they don't want to have to get a title loan and pay 400%
Yeah.
APR on $50 they need to get baby formula. That's
Yep.
crazy.
Yep.
Compostable core, compostable digital product, alchemy, lumen, probably not good for those
Not.
folks.
Yeah. Yeah. That's not going to
You
help
need a
them.
good core. You need to be able to do your it depends. All of these conversations, every time I talk to people about this stuff, everybody asks me about AI all the time. And I said, how would you use AI? Like,
Yeah.
what is your use case for it? I can give you AI tomorrow. I give you the link to ChatGPT and Claude. Go ahead.
Exactly. And you're going to go.
Yeah, we can do with it. I mean, you're going to throw your core in it. How do you do that? I don't know. How would I use it?
AI is the buzzword right now. I think
100.
that's true across every industry, right? I think
Yeah.
even our own
Yep.
organizations are like, we got to use AI on what? First on what, right? Like that's a pretty big question to ask. Like, okay, what is it you want to use it? And then the second becomes like, well, do you have the infrastructure to make that thing happen?
Yep.
If you don't have the infrastructure to make that thing happen, then like you got to move on from this AI dream. But if you don't know what you want out of the AI, you can't even ask yourself that question, let alone get it to work to do a thing that you think you want it to do. So we get those things, crypto, stablecoin, which we both
For sure.
have feelings about too. But
I love stable coins.
so yeah, I love the theory. I love the idea behind
100%.
it, and it's just another form of currency exchange, like cash, check, debit card. That's evolution. This is the next evolution of that. For sure. But they become kind of buzzwords where people don't take the time to ask themselves that why, so that they can create the strategy around it. And,
yeah, absolutely.
Kind of see where they're at.
It's a crazy time, and I think there's so many options out there from a technology perspective. Core aside, digital products, money movement, you mentioned stable coins, all of that stuff, those are all new buzzwords. Those are all new levers to pull.
Mm-hmm.
There's a I don't remember who said it. I think it was I don't know, it was an economist, but he said, look, there isn't one lever you pull. You pull all the levers just a little bit at a time. You pull this lever for that, you pull this lever for this. You can't make these big, grandiose movements. So rip and replace, to your point earlier, isn't always the best option. Sometimes you have to look at incremental improvements. Sometimes you have to look at, all right, maybe core is not my biggest problem right now. And maybe I have a plan to get there. If it means you have a side core and it means you're going to use a Nimbus or you're going to use something like that, and you have a 5-year plan to get yourself off of whatever ancient monolithic core you're on now.
I think over time we're going to see more of that idea around that too, right? Is those kind of phased projects of like, right now when we look at core conversions, we know our contract is up on this date. So like a year before that, we've got to notify whether or not we're going to renew or renegotiate a renewal term, whatever that is. A year before that, we had to make a decision if we were going to stay with them. Well, I mean, that kind of 2 to 3 years before that date, realistically. And we spend a lot of time on all of our vendor due diligence and going through the core conversion like demo cycle and then the planning for that. And then again, everything stops while we go through that, versus having the option. That's what I think is so important. We haven't had the option to do different. Those options are making themselves available to us now. So strategically, we have to consider like, maybe it's not a 5-year project, maybe it's 10. And however, in that 10-year window, the end state might be that we're in a completely new tech stack.
Absolutely.
But how do we modernize that over time? I think what we do avoid a lot, though, in credit union space is we don't actually consider the core layer the way we need to. We instead limit ourselves to whatever that current core can be. And then we do our strategy on top of that, versus asking ourselves, like, is this part of our problem? And if it's part of our problem, let's actually also embed into our phased modernization efforts how we're going to move away from those legacy systems and into something else. And that's where I think the benefits of running dual cores, speedboat cores like the Mambus, the Nimbuses, the Thought Machines of the world, create different avenues for the movement to do something and not stall everything for that period of time. At least that's my hope, right? I think for credit unions that ultimately always gets us the future proofing that we need. We're just not, a lot of the times we're still keeping ourselves beholden to the limitations of those legacy systems. So we kind of just kick the can down the road too.
Yeah.
That
Well,
7 years later, we're still in the same boat.
absolutely. And that's a good point too. One of the things that I think credit unions need to start doing today is they really need to take a real hard look at their contracts.
Yes.
Terminations, early terminations, terminations for cause, service level agreements, who owns the data.
One.
Everybody's talking about mergers, credit unions are disappearing. I have no idea what these figures are, but I guarantee you that revenue from early terminations as the result of a merger is very profitable for a lot of the core providers.
Absolutely, it is.
So that needs to be,
They
there
have
needs to be some hard conversations.
Yeah, there is no incentive, I think, from the core side to deter mergers.
No, nope. It's a cash cow. If you have to write a $2 million check because you're doing a merger, there's
And then
no
I'm keeping
value in
you
that
on my
$2 million.
core anyway.
Exactly.
Like, right, if I'm on one orange core at the acquiring credit union and one orange core at the merging credit union, like orange still gets the check over here when you add all those new members in. They just also got a bonus.
100%, because they did absolutely nothing, and they're not a value add. They're not providing any additional service for that $2 million check. All they are is a debt collector.
Yeah.
And it's even you mentioned two different cores, but I know for a fact that there are some contracts out there that are probably very old that don't differentiate. So if I have a DNA core on this side and I have a DNA core on this side, and
It's
I
still a
decide to
deconversion.
merge, it depends
It
on
is
the
still a
size,
deconversion.
what size of the credit union, or what's the surviving credit union. So if this contract as a surviving credit, well, that's backwards. If this contract as a surviving credit union doesn't, is moot on whether or not there's, some benefit to DNA, you're screwed. This credit union is paying $3 million and you're out $3 million, and there's nothing you're going to do about it.
There's nothing you can do about it. Nope.
Nope.
No, they do
100%.
not, unfortunately. And that's just the cycle we've been stuck in for a long time. So,
Well, do it now, because, these things only come up every 5 years. And if, a lot of these were signed many, many years ago, and
they
some of them are
green,
7,
they just
6,
roll.
10 years, and they're just rolling after
and they
rolling.
just roll
You
over.
better look really, really hard at them, because there's an opportunity there.
I think that's step one. If we were really, I think from my perspective, to say like, you want to modernize, but you don't even know yet quite how long that is in front of you. Step one is what you're talking about. Is okay, then get the contracts in order. Understand, get them as coterminous as you can. Like, yes, it's going to take a lot of time and effort, but it'll be worth it in the end, because it's going to give you freedom of choice, or at least better freedom of choice.
Absolutely.
As you move forward, and certainly who owns the data and how can you access the data, right? Because one of the fears I have for credit unions that want to do phase migrations is, does their contract even let them connect their ecosystem if there's another core in the mix?
Absolutely.
Or would they be violating something? Would they be violating and not even necessarily knowing?
Yep. And then they find out, and then, after you've implemented this new core and spent all that money to do that, they're like, oh, by the way, you owe us $1 million. Wait, what? Yep. And you didn't do anything for that $1 million.
That is one of the first things when I have credit unions that bring that up. I'm like, have you looked at your contract? Do you know, like, what can you do on that front? Because if you can't, then you've got to architect around it if you really want to do this to keep yourself out of hot water.
Well, I shamelessly steal from people that I admire. And one of the things that I stole from Stephen Bartlett in his Diary of a CEO podcast is I ask my guests to leave a question for the future guest, not knowing who they're going to be or not knowing anything about them. So I'm going to give you
okay.
the last guess that I had some time ago. So this is kind of an older question, but I'm also going to ask for a question to leave for the next guest, which actually will get answered next week or maybe in a couple of days. I don't remember when. But so the question is
Cool.
from an Aussie. His name is Damian Lacey. He runs a process improvement consulting firm in Australia. And we had a great chat about process improvement. And his question was, what's the one thing that you've done personally that has improved your productivity in a noticeable way?
Ooh. Learned how to delegate to the people I trust,
Okay.
but don't
That's
always
good.
model that trust by giving up stuff.
Yep. You're a bit
So
of a control
for
freak, huh? Yep, I know. I can feel it.
not a little bit of that, and also a little like sort of ADHD brain. If it's not right in front of me, I will forget about it, right? So as long as I do it right that second and finish it, then I know it's done and I can like polish that off and get my little dopamine hit from the completion. But however, those are not great leadership traits to always have, and it doesn't
Agreed.
create the confidence in the team around you. And I'm hiring those people because I trust them, and I'm training. I want them to be able to step in for me at any time, so that if I win the lottery and move to Tahiti, they just roll right in, right? So for me, even though it felt like I was not optimizing processes per se, because it took time to coach,
Yep.
the overall outcome tends to always be that we get more done
Okay.
and better, much
Yep.
better.
I like that. All right, so now it's your turn. You have to give me a question for the next guest, not knowing who they're going to be.
Okay, the next guest, not knowing who they're going to be. I'm going to ask them, what was a surprising element of being in a leadership role that they didn't expect? Like, when they got into that role, they thought they kind of knew what they were getting into. What's the thing no one told them? No one warned them. They didn't read in a book, but that they learned as they actually had to walk that journey.
I like that. That's a good question. Well, this was awesome. Thank you, Amber.
This is so fun.
Appreciated, you hopping on and chatting about credit union stuff. Maybe we'll have to have you on again and we'll just talk other stuff. The views and opinions expressed on this podcast are those of the host and guests and do not necessarily reflect the official policy or position of any organization, employer, or entity. The content provided is for informational and entertainment purposes only and should not be considered professional advice. Always seek the guidance of a qualified expert for any specific concerns. Thank you for listening to the Knowledge Stack Podcast.